Mira Business FM, Dubai's home of business radio.
Welcome back to Midday Majlis, coming to you live on Mirror Business FM. And now joining us online from Canada is Fadi Hbib, who is a financial markets educator who helps people grow their money responsibly in the stock market. Today we'll be talking about financial literacy, smart investing, and clearing up common stock market misconceptions, all aimed at helping our listeners make informed decisions about their money. Fadi, welcome to Midday Majlis.
Hi, Sahar. Happy to be here.
It's really good to have you with us. And I know it's 3 a.m. there in Canada. It is really early for you, but thank you so much for being
Yeah,
able to join us.
thank you very much.
Can you please tell us
You're welcome.
about your journey and how you became a financial educator?
When I was a kid, I did everything my family told me to do, mainly get good education, get high grades, get a good job when I graduated. So I graduated from engineering 20 years old. And all of my life, I had high-paying jobs, but my issue was that I could not get the car that I wanted, could not get to the trips, all the trips that I wanted. So I was consumed with the idea of building wealth. And my father is a doctor, he's not an investor. So their money-making mode is just being an employee. So I read this book called Cash Flow Quadrant, and I learned very quickly that there are four ways to make money. Employee is where everybody is being pushed at or groomed to be, and it's really not the best deal being an employee. So basically, I learned that I should be an investor, but I did not know how to be an investor. I had to educate myself, go to a lot of courses. So I started with real estate investing, did a lot of mistakes, but did very well. And then 15 years ago, I had this view that anybody who invests in stocks and options, or stocks mainly, is an irresponsible investor. And I had this view because everybody around me was losing money in the stock market. So anyway, when I was introduced to it, I did very well. They asked me to coach people for them. So I've been coaching people for the last 12, 13 years. And then last year and a half, I did my own company to do it, basically to teach people based on my mentorship, my
Right.
design of looking at how to do this properly.
As a financial coach yourself, why does financial literacy matter so much today?
I talked to a lot of people, Sahar, and I talked to a lot of people from the US, Canada, Europe, and the Middle East. And it doesn't matter where you are, people are really hurt financially everywhere. It's a very important topic, and people need to know that there are tools out there and there are proper way of investing. Um, One of the issues uh, that I'm seeing is that there's a lot of scams out there. There's a lot of miseducation. There's a lot of hype. There's a lot of myths around. You can make money very quickly, and if you just do that, we can get, like, I don't know, $100,000 in 2 weeks. So there's a big need for that because it's a great way to make money, but also it's a great way to lose money if you don't do it properly. And with all the misinformation out there and get rich quick schemes,
The scams,
uh,
yeah.
it's scams. Yeah, yeah. So I just had an interview with one of my students. He got scammed with $500,000. The interview is on my YouTube channel. And basically, it was a pump and dump scheme. They take you to these WhatsApp groups and they tell you what to buy and sell. And they really have bad motives. And the guy lost $500,000. Um, so lots of scams out there. So people need to be careful with their money, and they need to understand that basically with extremely high ROI, there's also very high risk. ROI and risk don't get separated.
And how do you
So if
think people nowadays, many of them, they actually feel intimidated by the stock market? And I think you were talking about it, like how, you have also lost a lot of money back then when you started. So, what are some practical ways beginners can start investing and growing wealth over time?
Um, so uh, it actually starts with understanding the proper market behavior and understanding that there's a lot of myths out there about the stock market. One of the myths is that you can make money very quickly, or you see, and the problem is that there's a lot of ads out there that tell you that day trading or if you just buy some crypto, you will be very rich very quickly. This is not really accurate.
That's not how it
Investing
works.
is
Yeah.
yeah, this not doesn't this is not how it works at all. Investing is a little bit of a long-term strategy. Okay, it's you need to have a long-term view. Anything that sounds too good to be true is probably not true. Okay, so first thing you need to know is that it takes a little bit of time. Okay, and it is not gambling. A lot of people approach the stock market as if it's a big casino. Uh, um, we are buying and selling businesses, and people sometimes spend more time researching a refrigerator if they want to buy a refrigerator, much more than buying the stock. Even real estate investors, I see them do the same issue. When you buy a rental property, a prudent, responsible investor will ask, how much rent does it get? What are the expenses? Is it cash flowing? What is the cap rate? All of these questions to figure out if this is a good investment. For some reason, when people go to the stock market, even real estate investors, they forget all of that. The extent of their research is just one of their friends told them to buy stock. For me, it's very simple. If you bought any stock without looking at the income statement or the balance sheet, you're really a gambler, right? Because you're buying and investing in a stock, in a business. So you need to understand that the stock is doing well, the business is doing well. Another myth that is out there is that the stock market goes in a straight line. It doesn't. It mimics breathing. It goes up a little bit and goes down. And we have the statistics out of every 5 units of time, four of them, the market, and I'm talking mainly about the US market, 4 units of time, it will go up or sideways, and 1 unit of time, it will go down. Okay, so overall, the market is going up by about 10, 11% for the last 50, 100 years. So it's going up, but it doesn't go up right like all the time. So it is totally normal. People need to understand that it's totally normal that the market goes up and down, and there's nothing wrong with it correcting.
Right. And what is it that they should do in order to understand about balancing risk and reward? How can they do that?
Okay, very, very important in the stock market versus the real estate. Real estate cycles are a little bit long. Takes so much time to go up and down. And the stock market is very volatile. So to balance risk and ROI, you need to understand how you need to study for every strategy you use, how other people lost money in the same strategy. Because if you are not aware um, of the risks, you'll be the next one. So as a fundamental rule, risk and ROI are a couple that can never be separated. So if there's something that you're seeking, if the strategy that you're seeking is telling you that it will get you 100% every year or 50% every year, understand that the risk involved, whether you are aware of it or not, it is there and it's humongous because that's really huge ROI. People need to understand that even Warren Buffett, his average return per year is 19.6%. So if you go for 100% or 50, that's really too high. With some of the strategies, it is very important that you never use something called margin, meaning you don't borrow to invest in the stock market, especially from the brokers, because it has really devastating effects if you do that.
Right. And
I will never.
also to always remember that, of course, what goes up goes down, as you mentioned a while ago.
Uh, Overall, I don't completely agree with what goes up goes down because it gives the impression that there is no profit. No, there is a lot of profit, but just the behavior of the market is that it goes up slowly 4 units of time and goes down 1 unit of time quickly. It's just normal, but overall it's
So
going up.
it's a normal cycle.
Yes, correct.
Right. And then financial literacy isn't just about stocks, right? How can people apply these principles to daily money management as well, such as budgeting, saving, and planning, let's say?
The formula to get wealth is actually very simple. It's that you have to uh, spend less than what you make. And this is becoming really difficult everywhere because people want to keep appearances, especially young people want to look cool. They want to buy the latest.
Follow the trend.
It's very, yeah, follow the trend, look good. So very important that you understand, you need to be aware. One of the main things that I used to do in the beginning of my career and my life is you gotta understand what is your expenses. So every 6 months or so, you need to stop, look at all the different sources of income you have and all the expenses. And there's a lot of software tools out there that can log everything. So you can download from your bank all the different expenses, and you need to become aware of what is it that you're spending money on in. Okay, that's the first thing, is that awareness. Number two, you need to consciously make the decision that you're going to put some money aside every month to invest. I don't like to use the word save, because saving cash is one of the worst things you can do because of inflation. So you need to invest. You need to find an investing vehicle, mainly real estate or stocks, and you need to put that money each and every month, regardless of the market going up or down, because the road to wealth is about investing and not saving. So understanding your expenses and income, making the conscious decision to spend less than that what you earn. Not only that, you keep X amount, 20% or 10% aside to invest. And investing takes a little bit of time, but it's very rewarding with compounding.
Right. So you're suggesting that saving money aside is not going to help in a long run, but investing into something is definitely going to grow your money over time. And this is,
Saving money is, yeah, saving money is one of the worst thing you can do. Saving money, and our parents didn't really understand this very much. Saving money meaning save money at the bank, cash. That's the worst thing, because everywhere in the world there's something called inflation, meaning your buying power. If you have $1,000, if the $1,000 will will buy you whatever thousand pence right now, tomorrow or after a year, this $1,000 will buy you $900. You can buy 900 pence with it. After 5 years, you can buy 700 pence. The buying power of the same cash goes down because there's inflation. So please don't save, invest.
don't save and invest. Okay. Now that's a great advice. Moving on, you're actually based in Canada. Are there any lessons that apply universally for our listeners here in the UAE when it comes to investing?
Investing rules goes everywhere. It's the same thing. So do not trust get rich quick schemes, because they never do. Invest responsibly, meaning you need to have a strategy, understand a strategy very well, and you need to understand the risks involved. For me, my formula is 10% strategy. So if you go to YouTube and learn a strategy, that's not enough. 30% is risk mitigation. Understand that you need to understand the risks involved and mitigate them. 60% is psychology. Understand that you need a healthy dose of fear and greed. If you're too fearful, you will do no action, because you will be paralyzed. A lot of engineers like me like to dwell in this analysis paralysis. We think that's an action, but it's not really action at all if you think about an investment. So fear is important, that you have a healthy dose of fear. Also, if you're 100% greed, you will lose money very quickly, because all what you'll be seeing ROI. So you need a healthy dose of fear and greed, and you need to know how to manage them. Also, you need a proper objective. The objective for me, my target is about usually 24% ROI per year. If you go much more than that, understand that the risk is very high. So for me, this is a sweet spot whereby it's a good ROI, it's double what the market gives, but also at the same time balancing risk. It's not too much risk for me as well. The last thing is, when you learn a new strategy, do not commit money to it right away. Open something called a paper trading account. A paper trading account is free to open,
Mhm.
and a paper trading account allows you to test. They give you $1 million monopoly money to test, to try your strategy. So if you win, you don't win any money. If you lose, you don't lose your own money. It's a free account and $1 million monopoly. It's a really great way to test any strategy, and you don't commit any money in your account before you prove to yourself that you can make
You're
money in the
capable of
paper
doing
trading
this.
account.
Right.
Yeah.
Yeah. And what is your advice to our young listeners or investors? I would say we did talk about how the young investors or the youngsters are more into following trends these days than actually investing or even saving up. So, what is your advice to them?
Um, Investing is not supposed to give you adrenaline kick. I know people like to put their money at risk because it gives them a kick. There's so look what happened to the stock market. Uh, Proper investing is actually very boring. My advice to them is to not follow the get rich
Strategies.
quick scheme.
Yeah.
Yeah, and to invest early. The more you invest early, the rewards are tremendous because there's something called compounding and there's a rule called 72. With compounding, if you take 72 divided by the ROI that you get every year, it will give you how many years it takes to double your money. So let's say your ROI is 12%, 72 divided 12 means it takes 6 years to double your money. Every 6 years, you'll double your money. Um, if your ROI is 24, it takes 3 years to double your money. So compounding, especially if you start early, has beautiful results. And only the young people enjoy that because they have time. One of the things that Warren Buffett usually, when they ask him, why did you have so much success? One of the main reasons he says is that he has good genes, meaning he lived a long time, means he allowed compounding to help him a lot. So invest early, invest responsibly, um, and don't go for get rich quick schemes.
Right. And of course, be aware of scams out there as well.
Yeah, yeah, be aware of
Right.
scams.
Fadi, thank
Very
you
important.
very much for being able to join us and for sharing such practical insights with our listeners today. We wish you a great day ahead. And thank you again for
Sahar,
joining us.
thank you very much.
That brings us to the end of today's Midday Majlis show, which was coming to you live on Mirror Business FM. And I will be back with more engaging conversations and interesting discussions. Do not forget to like and subscribe to Mirror Business FM. Until next time, this is me, Sahar Mushtaq, signing off.